reporting format. Yeah. So, just to let you know, even post this interactive webinar, SEBI is willing to look at any further, small bits of changes that may be required so that it is easier for fund managers to upload all of this. And the idea for SEBI is to look at, less physical inspections. That was the premise with which they started this consultative exercise, so that the data format itself is elaborate enough, and the data they receive should be enough to let them know whether everything in the fund manager space is happening appropriately in terms of compliance with the SEBI AIF regulations. So with that, welcome to all of you. Good afternoon, and I will invite Bhavin Jitania, Head Products at 361 AMC, to set some more context and then start off with the presentation. Bhavin, over to you.
Thanks so much, Rohan, and special thanks to Team IVCA for setting this up. Very good evening to all fellow participants and friends. So what I'll do is maybe spend a quick couple of minutes on clarifying and building on what Rohan very aptly put, and explain the context and the key announcements that we've seen post this regulation coming in. And as Rohan very well captured, I think we must address the point and the perspective from which this change has come in, and appreciate the fact that SEBI is trying to make our life and their life simpler. I think that is very, very important to understand upfront. So we would have all, as an industry, seen multiple data requests coming from regulators, and multiple regulations which have changed over the past couple of years. That led to a lot of additional reporting, a lot of additional changes, as well as a lot of non-standardization that built in. So what SEBI has tried to do, and Shreya, would be great if you could also browse over the slides one by one. I think what SEBI has tried to do with this, and as Rohan mentioned, we've been part of this effort, and we've had this constant dialogue with SEBI and the team. And I must appreciate the efforts taken by the team at SEBI in acknowledging a lot of our feedback points, as well as correcting and modifying few changes that we've constantly been making basis our experience, as well as feedback that we've gotten from a lot of you and the industry at large. So appreciate the effort, and I think it'll go a long way in smoothening, streamlining reporting, and also reduce the time that we take for any inspections or any further data requests that come in from the regulators. To my mind, once this streamlines, should be significantly lower. So I think this is a step in the right direction. It's a great move. You will see, like any change, a little bit of a teething problem, which we are happy to help you through, not only through this call or through any follow-on sessions that may be needed. So just to quickly give you a few key takeaways or important points. Firstly, on the timelines, and that is one very popular question that comes in. So the submission timeline that SEBI has given is 15th November 2023 for the quarter ended September 30th, 2023. We also did a trial run where data for the quarter ended June was uploaded by a lot of AIFs, and a lot of I would say teething issues in terms of the tech, the platform, the portal, etc. were looked into. So now I think we are better placed to adhere to this timeline, and this is effort which is ongoing. So I'm sure a lot of us included are trying to coordinate and work and make sure the data is submitted. But the deadline that we need to work towards is 15th November, which is roughly a week from now. To just browse over a few key changes, few key discoveries that we've had basis discussion with SEBI over the past couple of weeks. So as I said, in terms of intent, the idea is to make sure uniform reporting is there, which is easily comparable, which is easily interpreted, and results in lesser and lesser follow-on queries from regulators. To just browse on few key questions, this is again populated basis a lot of questions that came. So when it comes to corpus related information, we don't need to put across cumulative reinvestment. We just need to focus on putting across the point in time data on investments done and not include cumulative reinvestments. Also, from a transaction level, details on divestments and investments are not needed. It is needed at an overall level. Third, for category 3 schemes, there is obviously, and you would see sections to this reporting format, which my colleague Pravesh and Leela will take you through. But predominantly, most of the data points required are from a Cat 2 standpoint. So when it comes to Cat 3 schemes, the focus is to be restricted only to investments in unlisted securities, if any, done from Cat 3 schemes. There were, of course, details on investment made by schemes across other schemes, which was fairly lengthy, but we've now compressed that basis feedback. To just build on a couple of points before I hand it over to Leela, in terms of temporary investments, now the details are fairly limited and only overall numbers need to be posted. On the other sheet, the valuation details have to be as per the independent valuer report. So again, to clarify, when we submit this as on 30th September, you may not have an independent valuer report done on 30th. So you will need to refer to the last independent valuation done, which will be typically 31st March for most. The table on reporting of investments made by co-investment schemes is now removed. So you do not need to populate that table as well. And there have been more validation features that have been added in. So these were a few quick points, key points that I wanted to touch upon. I'd request Leela to take you through the general information that the AIFs need to fill in. So over to you, Leela.
Thank you, Bhavin. Shreya, if you can move to the next slide, please. Yeah, thank you. So general information, while you guys will be familiar with the same sheet which used to come in the earlier quarterly reportings, there are 2-3 additions which have come into picture. One is with respect to co-investment. While Bhavin said that the table on co-investment has been reviewed, SEBI was very insistent on the fact that they want all the details of co-investment. We had to literally go and fight a battle saying that it leads to a seepage of information from another license that we have taken. So the limited information, what is expected from you over here is the co-investment, whether you have been facilitating, and you have to strictly stick to the co-investment definition that the regulation provides, which is basically, have you provided any advisory, have you charged any fees for providing a co-investment, and that tantamounts to co-investment. Just strictly stick to that. If you see, there's an explanation which provides what a co-investment means in the eyes of SEBI. Just be very limited to that. In case you are an existing portfolio manager, in your case, you would have just gone back and informed SEBI that you're going to act as a co-investment portfolio manager. In your case, whatever is the date you intimated to SEBI, that is a date that is expected over here. In case you are a new manager, you will put a new date when you took a CPMS license. In case you are an old manager, you will report the existing PMS date, whichever would have been taken. It might be 4 years or 5 years back. That is a date that is expected over here when you say date of registration for portfolio manager. The next tricky thing that we see over here is key managerial personnel. We have a lot of questions as to what tantamounts to key managerial personnel. There is a definition which SEBI has released. Who is a key managerial personnel? So we had one question which spoke about investment committee being part of key managerial personnel. So that's not a part of key managerial personnel. The definition for key managerial personnel is your CEO, CBO, or in likes of such designation who takes decisions for the fund. That is called, those are the people who are called as the key managerial personnel. Just keep the information limited to those set of people in this information sheet. Date of appointment strictly should be limited in case you are a new fund. That will be the date when you have the PPM approval date that has come from SEBI. That should be the date of appointment for the fund. For example, you may be having a CEO who might be 5-year-old. You just launched an AIF after 5 years. The date when you get approval for the launch, that is the date of appointment for the fund, not 5 years back, 6 years back. That's been discussed very clearly with SEBI. So please keep a cognizance of that date, because your launches date are going to come, your scheme launches are going to come in the next sheets. So it has to sync up with those dates. That's one. Date of resignation. So I have a lot of questions coming saying there is a gardening leave, there is a notice period. So whatever are those periods that a key personnel has to serve to the organization, irrespective of that date, the last date he is associated with the fund, that should be the date of resignation. Please keep vary of it, because we see a lot of questions over here saying gardening leave is as good as not being associated. If you think that the key managerial person is not associated, under the regulations, you're supposed to inform investors and say that managerial person is not associated. So immediately, either you impact that change and then say that is the date of the resignation from the fund, or let it go through the natural course of the person leaving the organization and then saying that is the date of the resignation. Be very consistent in terms of it, because this implies there is another regulatory requirement of you informing the investors. And with this details, SEBI expects in their next inspection report to see these dates that you have reported over here, and then pick it up in the inspection. Have you done the compliances which are required under the regulations? So we also have few questions which says a KMP as on quarter end. There is nothing called a KMP as on quarter end. It is a reporting. It is an FYI, year to date reporting, right? So your KMP was associated from 2. So this will keep on getting accumulated over a period of time. It will not be quarter on quarter. Shreya, if you can move to the next slide, please. In this 2-3 sections, if you see, we have highlighted it, which is where the maximum question comes. So when we say about the name of the scheme, the PAN, self-explanatory. But when we move to whether the scheme is a liquidation scheme, it is expected, as you would know, there's a SEBI circular which says that if in case you have a liquidation scheme, your title of the scheme has to include the word called liquidation. So that is expected from SEBI. Whether this is an extension of an already existing scheme, you have to say yes or no. The date of filing final draft PPM of SEBI is the date when you did the first filing with SEBI. So we have a lot of practice going on in the market which says, okay, even after SEBI gives an approval, if there are incremental changes, we go and do an FII filing with SEBI saying, please note there are additional changes. So that is not what the date SEBI is expecting. SEBI is expecting the date when you did the first filing, either on your portal. When the portal was not in existence, initially in the stages of people, there are fund managers who have been working since 2012 and the portal was not very active. So that will be the day when you did the first filing. Even in that cases, the regulation very clearly said that you have to file the PPM with SEBI and give a 30-day gap before you launch it. So that is the date that you have to include when you put the date of final filing of the final draft PPM with SEBI. The second is the date of SEBI communication taking on record. While I understand in the older schemes, you never had SEBI taking on record, so you just take the 30th day in that instance. But in the newer instances, you do have SEBI letters coming into picture, so you will include that date. We have a lot of questions coming saying date of launch and date of initial close. Date of launch will be when you started circulating your PPM in the market, officially saying that you have launched your fund, going out and giving, because basically you will wait for SEBI approval. After SEBI approves, you'll start pushing out your marketing documents, giving it to your distributors, having direct engagement with client. That is supposed to be the date of launch. And your date of initial close is in line with the SEBI circular, which says that within 12 months, you have to do an initial close. So that is expected to be the initial close. Please don't get confused. Your date of launch and initial close, your initial close will be always after the launch or same date if that's what you are saying. For example, many people just do a one fund investor or two fund investors where they've already done a pitching. So if that's the date of launch, keep it same, but your date of initial close is supposed to be after your date of launch. And your date of commitment received is in line with the corpus definition that you have in the SEBI regulations, which means whatever you have got in line with an agreement value, which is signed by an investor giving you a commitment, that is what is expected over here. This commitment received has to sync up with other sections, which Pravesh will take in some time. So the corpus definition. So it has to be aligned with that. And your date of final close, Shreya, if you can do one more section of enter. Yeah. So next we come to the details of tenure of the scheme. Be slightly careful when you fill up this detail. Your tenure, the section which is highlighted on the screen, if you can see, this tenure is only about the original tenure. A lot of your fund documents will say the tenure will be 5 years from the date of first closing plus 2 years of extension. So the date that will come over here is 5 years. It will not be the plus 2 years of extension. The section to give that plus 2 years is the next section, which is the column C, if you see on your screen. And any extension if you have taken, and then the follow-on information. So if you go to column number F and G, for example, your tenure has got over. Now, what is the information that you're supposed to fill? Which is, have you intimated SEBI that your fund is going to get wind down? That is one. Second, if it is fully liquidated, yes or a no, then the follow-on question will be, if it is a no, then what are the course of action? Have you taken a consent for doing a liquidation scheme? If not, have you taken a consent for in specie? or whether you are doing a mandatory inspection. This is how your information, and all these are very important from the context, because in inspection, this data is a very critical information. So be very careful when you fill up this section at least, because I have a lot of questions which say, in June was the liquidation scheme launched. I did not had a choice to launch a liquidation scheme. What do I do? Then you are running a winding up process. So you have to fill in information. You don't have a choice but to filling up saying in the process of getting wound down, or you're doing a mandatory inspection. Because as you would know, there have been a lot of show cause notices which are going across SEBI for people who have gone beyond the extension period and still not wound down. So this information is what SEBI is expecting for the purpose of inspections, and also for the purpose of running around a surveillance to see how many people are there in the market whose funds have got wound down. Still, they have not done a distribution, and what is the course of action that you are taking. So hence, be slightly careful when you fill up this data. Shreya, if you can move to the next slide. So SEBI communication taking on record means that there is a letter which is issued by SEBI taking the fund on record. In many cases, in the older cases, SEBI did not used to take the letter on record. So the 31st day after filing with SEBI will be the date of record. The next is, Shreya, okay, so this is more self-explanatory. In this, one of the tricky portions that we see is date of filing of liquidation scheme. As you would know, the liquidation scheme circular says that you can launch your liquidation scheme immediately in your liquidation period. So 1 year tenure after your winding up is a liquidation tenure. Within that period, the day you file with SEBI, you can immediately launch the liquidation scheme. That is the starting date of the tenure. Hence, be very careful when you launch a liquidation scheme. In the gist of launching a liquidation scheme, for example, you go ahead and file a liquidation scheme criteria in 6th month. Immediately, the day you file this letter with SEBI, that is the day your first day of the liquidation scheme starts. Hence, this date is very, very important. So please plan your liquidation period and launching of liquidation scheme very carefully, so that you don't have an overlap of that. Because don't assume that your liquidation scheme will wait for the entire liquidation period to get over and then your liquidation scheme starts. The liquidation scheme starts the day you file the letter with SEBI. So please be careful, and that is the reason SEBI is asking this date. And date of in specie and date of mandatory in specie is self-explanatory as per the circular. If you don't go ahead with, Pravesh, you can take over.
Yeah, sure. Thanks, Leela. Yeah, so the most, the complicated one, or the questions which we have received on the corpus details, which is still we have tried to give the maximum explanation as we can give, but still there are the multiple questions which we are receiving. So we will just once go through this, and we will highlight the specific points where we have received the maximum queries from the industry. So couple of column initially are the self-explanatory, the name of the scheme and a serial number. Then the total commitment received as at the end of the quarter in a column B. So technically this commitment number is in just a simple language, is an active commitment which we have as at the end of the quarter. That number we need to report. So how to compute or calculate the active commitment as at the quarter end? So total gross commitment which we have received into the fund, reduce all the capital reductions, if any, exits, forfeitures, reduction of commitment that needs to be reduced from that particular gross commitment. We won't be taking any impact of the transfer cases, transmission, or a principal repayment. And in the case of the open-ended schemes, technically the gross contribution is equals to your commitment. Now we have received some question in this particular para is that if the commitment is recallable commitment, or the commitment which we have not called yet for, like a drawdown or something like that, in that case, what we should report here? So in a total commitment, we should report the number of a total commitment, irrespective whether you have made the principal distribution out of that commitment, or it is a recallable repayment of a principal. You should report the gross commitment net of all the given the details like exits, forfeiture, and everything. So it will be the active commitment as at the end of the quarter. Corresponding to that, the cumulative fund raise is also clearly a replica of the total commitment. Whatever we have called for from the total commitment, which is active commitment as of the quarter end, we need to report the total fund raised from that particular commitment as on the quarter end. So exactly related to that particular commitment, whatever the fund we have received from the investor, we need to report here specifically. Then the last column, which is a principal distribution. column H, in the principal distribution, there is a small the differentiation between both of them, where we are saying the total commitment, which is column B, and cumulative fundraise column C, we will report only for the active investors who all are the active as at the quarter end. But the principal distribution and the principal repayment from that particular investments, we need to report since inception all the repayments, including active as well as the inactive investors. So here we need to give the total number of distributions which we may have made during the tenure of the fund till the reporting period. Then the second part of this, the corpus details, where we are referring to a cumulative portfolio investment made as at the end of the quarter. So in this cumulative portfolio investment, we need to consider all the investment which we have made through this particular scheme over the tenure of the fund, without deducting any divestment or anything like that. We should not reduce anything. We need to give the gross investment value over the period of the fund till the reporting quarter or a reporting period. So we need to consider all the investments, including the corporate action, which is non-cash in nature or a cash in nature, if it is by any chance or anyhow, if it is impacting the cost of investment. Similarly, the cumulative cost of divestment, we need to consider all the divestment which we have made since the inception of the fund till the reporting period, in the same line as we are providing for the cumulative portfolio investments made. Now the temporary investment made as at the end of the quarter, which is referring to column E, here we will mention all the cost of the temporary investment which we are holding as at end of the quarter. So cost of temporary investment is at the end of the quarter. It should not be the cumulative number of a temporary investment. It is a temporary investment we are holding as at the end of the quarter, and not the since inception total value of temporary investments. Now in the cash and cash equivalents, like a cash in hand, here we have received multiple queries and some gaps in understandings and all. So technically, we have given a simple formula. As at the end of the quarter, if you have any cash which is in transit, whatever name we called it, whether it is advance against the sale of securities, unit application pending allotment, contract of sale, contract of purchase, or there might be some other situations which could be specific to that particular fund house or a AMC, we need to accordingly adjust our cash balances, which can replicate the correct number. So just to give you an example, the purpose here, nothing should be out of reporting part. So I'll give you an example. Let's say in a listed investments, if I have sold something from the listed portfolio, so my sale entry will go on the T0 day basis, but fund I will receive on T+1 basis. So while reporting, let's say if that particular days is going to be the quarter end, when we are reporting, then there won't be my holding in my portfolio, but technically I need to add back that in my cash balances, which supposed to be received in a T+1 basis, vis-a-vis for the purchase as well, and any other matter for that particular case, maybe in a particular AMC or a fund houses, we need to report the clean cash balance for that particular reporting period, where we should consider that particular portion of the AUM in the cash in hand portion. It should not be that it is an isolated part or the part which is not considered in the reporting portion. So there could be some exceptional situation also would be there, but we need to accordingly consider those things as well. There were some query regarding this, that whether we should merge the cash in hand and the temporary investment. So as we all are aware that earlier the cash and cash equivalent was the single similar part or the reporting table which we used to have in earlier reporting format. But there is a specific requirement of a SEBI. They want to understand how much you have in a temporary investment format and how much you have in the hand. So we won't be able to merge this, but we need to report appropriately that it should give a correct output. Then the part B of this particular corpus details is the calculation of the investable fund. So in a calculation of an investable fund, the total commitment received or a corpus should be exactly the same number which we are reporting in a column B in an earlier table, which is this one. the total commitment received as at the end of the quarter. It should be the same number which we are reporting here. Now, multiple questions: how to calculate estimated expenses, whether we should consider the taxation paid over the period of time in the CAT 3AF, whether we should consider the other indirect taxes like GST or something other like that. So the answer to that particular question is that while computing the estimated expenses, we need to refer our PPM, the structure of our PPM. Accordingly, we need to compute the expenses. For computing the expenses, the tenure is a critical part. Please refer the SEBI regulation on the portion which is given in the Master Circular July 23, that how the tenure should be considered for the calculation of the estimated expenses. Accordingly, calculate the expenses. Now the two portion, the GST and the income tax. Income tax is applicable in the case of CAT 3AF. GST is applicable in rest of, including the CAT 3AF everywhere. So now excluding GST is a specific point where we have received the couple of queries that why we are not considering the GST here. So couple of points here, that many of the fund houses have registered for the GST number, and accordingly some of them are using the input credit or giving an input credit to the distributor or to the other investors or something like that. So in that case, and point number two is that the GST percentage could be changed or maybe change in a future, so which won't be able to give us the justifiable or correct number at any given point in time. If the fund tenure is, let's say, 5-7 years, and after 3 years, if the rate is going to be, let's say, 28%, and reporting that for a whole 7-8 years won't give you the correct picture. Hence, we are keeping this out of the GST portion. Just report everything basis your PPM, excluding the indirect tax, if any. Now, when we come to the direct tax portion, specifically in a CAT 3 AIF, in that case, the taxes is a point of, the direct tax is the point when we generate directly the income from the fund. So it is a part of the income, and it is not chargeable on the corpus or the commitment of the investor. So whenever we will have income generated into the fund, it will be the charge on the income. So if there is an income, there is a tax. If no income, there is no tax. So technically, direct tax also should not be considered while calculating your estimated expenses for computing investable funds. In case of open-ended scheme, we received a couple of queries earlier also. We tried to give the explanation that in open-ended scheme, the tenure of the scheme should be considered is as a 1 year for calculating estimated expenses. So commitment which you hold as of the quarter end or the reporting period, you need to calculate estimated expenses for a 1 year tenure for open-ended scheme. So let's move to the other slide, which is on the investment part. So now this is also not, I would say, a complicated one, but still we have received multiple queries on the investment portion as well. So here we will go tab by tab. The name of the scheme, name of the investee company, PAN of the investee company, type of the investment, type of securities. So here the SEBI tried to give the all possible clarification, explanation, and the possible the options available to fill in these particular tables. So which is more appropriate for all of us for your particular investment, we can report the things accordingly. We received a multiple queries, or we were also facing the challenge while giving the ISIN number. So let's say if I have one investee company having a couple of type of securities in that particular investee company, but in a particular type, I have a 5 or 6 securities in that particular type of investment for the same investee company, where we were facing the issue of giving the ISIN number. Hence, it was suggested that we should report all our holding as of the quarter end basis the type of securities or ISIN, whichever is higher. So technically, let's say if we have 3 types of investment in a particular investee company, but having let's say total 15 ISIN for a different type of securities or a same type of securities, but having a different the scripts and all. So in that case, we will report all our transaction basis the ISIN's availability. So let's say if we have a 15 ISIN for a 3 type of investment in one single investee company, we should add in here the 15 line items basis the ISIN. Let's say if the ISIN is not available, but the script is a unique or a different in a nature, then also we should keep it blank, or we should give it the separate line item for the each individual investment in a particular investee company or a type of investment or a different securities. Then if we have an FOF,
I'll just come in here, Pravesh. I'll just add
sure.
so Pravesh just mentioned. So the question would be why there would be different ISINs for a single security. That could be because the investment would be made in the form of CCPS or equity or maybe OCD or whichever other instruments. So while the portfolio company could be one single company, there could be different ISINs or different securities. So ISIN we have to provide only if it is available. But considering that there are different securities within the same entity, it is required to be reported separately. Yeah, Pravesh, continue. Thanks.
Correct. Thanks, Rajesh. While giving these details, holding details, so it is specifically mentioned that we won't be adding anything which we are holding as a temporary investment. That should not be the part of the details of holding as at the quarterly reporting period. So we should not give the details of the temporary investment in this particular table. And the ISIN specific, we need to give the details of the transactions or the holdings as at the quarter end. Then the SEBI registration or something like that, if it is the sponsored or the AIF or the specific FOF investment, if we have within the group of the AIF or the AMC, then we need to report. Sector specific drop down list, it's specifically provided this time for around 13 odd sectors, which was reported here, and given the sectors where we can tag our investments. Having said that, if there is any sector which is still not able to manage in 112, so we asked this question to the SEBI official as well, then they told we can't give more than this. Somehow you need to manage in 112 sectors. So that was the specification which we received. Now let's move to the next point, which is specifically the amount invested for all the investments, including the offshore investment. This table, so these are some internal controls which we have developed over the period of time or while reviewing this report and all, how we can have internal controls and verify that whatever we are reporting, whether it is in sync or not. So whatever number we will report here, so technically this number should be in a sync with the number which we are providing on a corpus details, which is column D minus column G. So column D reports to cumulative investments and a column G reports to cumulative divestment. So cumulative investment minus cumulative divestment is equals to your holding as on the quarter end. So technically total of all the line item in this particular table at the end after reporting for a particular scheme, it should match your number with the net of that column D and G from the cumulative corpus details investment. So technically that is a cross verification which we can keep internally to match that whether what we are reporting is in sync or it is not in sync. Happy to discuss if it is there any exception to this particular scenario or understanding. We will be happy to discuss subsequently. Then the details of the offshore investment in a dollar term, specifically $1 million term. So here we need to report the cost of investment in USD, net of divestment if we have made during the quarter. Because if you see the table nomenclature itself suggests that the details of holding as at end of the reporting quarter. So here we will show the actual holding at end of the quarter. We should not report anything which is a cumulative transaction as we are reporting in a corpus details. So here we will report the amount invested in a dollar terms, that too in $1 million format. And accordingly, we should report after considering the divestments here. And the last part, which is a valuation. So technically here we need to report the valuations which we have considered in our books of accounts while computing the NAVs. So this is not related technically to a regulation 23 of a valuation, but whatever the internal valuation which we have considered for calculating our NAV for that particular period. Okay, so if anything, so we have received the question, so whether we should consider the diminishing value or impairment or the provision or something like that. So we need to consider here the fair value as on that particular date. If we have any diminishing or the impairment or the provision which we have made for that particular investment, we should consider here the fair value, which is net of all the such costs. So we need to consider accordingly the valuation for that particular investments.
I'll just come in here, Pravesh. So in your valuation, in any case, all your impairment, diminution in value, etc., would anyway be factored. So there is no separate requirement to again adjust that. So your valuation itself would factor that those deletion or reduction in value, and that needs to be reported.
Right.
Yeah, Pravesh, continue, please.
Yeah. So this is a short table for a temporary investment. You can give all the details of your temporary holding as at on the quarter. You can report here. Again, here we need to report only the holding details, not transaction cumulative details since inception. So many of people just calmly read on the tables, columns, and the headers of the tables, which all are the self-explanatory, because we are receiving quite of a queries or doubts or some suggestions or something like that basis, whether we should consider it is a cumulative or at a holding period. So please refer calmly the table headings and the column headers, so you will be able to understand what is actually required. Also, we have added multiple notes to give a clarification and details to all your such tables and columns wherever required. Also in some next format, which might be a SEBI circulating after some time, we have given of more details basis these discussions and the queries which we have received. We have given more clarification notes to the reporting format. This is RFQ. I think this is self-explanatory, nothing to be specifically mentioned here. One cross check here also, that this number of a cost of investment, temporary investment, will match directly with the column E in a corpus details. So we have a double cross verification from the corpus details, one for the holding of the original investment as such, and one for the cost of temporary investment as well. Now this is information on investors, where we will give the count of the investors for all types of investors, which is a part of the old reporting format as well. Nothing specific, only the resident individual is a column which is added newly, because earlier it was not there, which is required one. Only one cross check here is that the total number of fund raised in this particular table for the individual, for all the investors, should match with the column C in a corpus details. So we have mapped the 3 columns with the 3 different tables in the same SEBI reporting, where we can cross verify our numbers. That should be in a sync ideally, unless otherwise we have any exceptions. Happy to discuss that particular part.
Yeah, so just to add to what Pravesh just mentioned, you can go screen above. So there are certain section, if you see, there is director, partner, employee of sponsor, director, partner, employee of manager. We have been receiving a lot of questions saying that, okay, ABC person who invested was a director when the investment was done, and today he is no longer associated. So we have checked this with SEBI, and SEBI was very clear. What did you do what was the status at the time of investment that is being expected over here, and not the frequent changes that happen. So please be aware about that. Even if whenever you did the original investment, what was the status quo of the category of investor, just stick to it. You don't have to realign it every quarter and quarter. And the second question that we usually see, is it about active investor? The answer is yes, it is about active investor. So if you're saying that one investor has transferred his investment, so if there is a change in category between the investor, obviously in the next quarter you will reflect that category, but it has to be active investors. That in case of transfers and in case there is an invocation of pledge, you will obviously record the change that has happened. In other instances, mostly the thing will be a status quo. Just be mindful of that fact. And when you move to the next slide, specifically, I want to be very clear with the participants that when you say foreign investors, In case of NRIs, there is always a confusion that an NRO is a domestic and an NRE is a foreign investor. I totally agree with you guys, but that classification is as per FEMA. Under the eyes of SEBI, they are more interested in understanding where the source of fund is coming. So if you look at from SEBI parlance, they want to understand how much foreign inflow is coming into the fund. So your NRIs will be NRE plus NRO over here. It is not equivalent to a foreign investor that we see from a FEMA perspective. So be mindful about, so don't include your NRO sections into the resident individual section. Be very clear. If there is an offshore address that somebody has given, irrespective of the bank account used, please ensure they get reported in the NRI in this section and in the earlier section, which is with respect to investors. We move ahead. We move ahead. Yeah. Okay, so Pravesh, if you can move to the earlier slide, I think there is a question that somebody wants to ask. So
Sure.
what we mean in terms of foreign investors is, as you would know, NRO account, NRIs, non-resident investors coming from an NRO account are considered domestic. That is in parlance of FEMA. When you look at this information, which is required by SEBI, what SEBI expects is, and what SEBI wants to understand is how much foreign inflows are coming into the fund. So please don't split your NRIs coming from NRE account and NRO account into a resident individual category. NRI coming from either NRE or NRO, both will get combined and will get reflected in your NRIs. That's what we mean when you talk about non-resident investors. Pravesh, we move on.
Sure.
Happy to take questions at the end, just for the sake, because we need to conclude it in some time limit that we have agreed on. So in terms of consent, two questions that we see very repeatedly. In many of the agreements, we have written that if an investor does not revert to me, it will be considered as a deemed consent. Okay, we discussed with SEBI, we had a lot of debate on this. SEBI does not officially, because the moment SEBI says a deemed consent is a positive consent and I will approve, it means that SEBI has approved it, right? They don't want to get into a regulatory clarification at this stage. So it's very clear. That is the reason we got included deliberately the response sheet called a no reply section, if you see. So if in case you have got a positive consent, please write a percentage in positive. If you have necessarily in written got a negative dissent from a client, please include it in negative. If there is no reply, then please include those percentages in no reply section. And we have a lot of questions saying, okay, deemed consent, how do we say we went ahead with the proposal? We went ahead with the proposal because it was contractually agreed. So if you see the proposal was approved or rejected, the last column in the sheet, it talks about whether did you approve or reject. It was in contractual terms. So it will be deemed that your contract had a proposal or had a proposition which said that if you do not respond within a particular time, it will be considered as a deemed consent. Or your agreement says deemed dissent. Depending on that, that will be considered, and that is what SEBI will look at it. I have a lot of clients who keep on asking these questions. I will include it in positive. Please note, the moment you write a positive consent, SEBI expects in the inspection a written confirmation from the client of actually giving a positive consent. So please don't use the concept of deemed consent and include it in the positive. That's actually inviting more trouble from the regulator when the inspections come. So please ensure that very clearly positive, negative, and no response is captured. No, please no tampering with it under the contractual terms, because SEBI is very, very categorical, because sometimes we see that in a side letter, one of the investors says, if I do not respond, it is considered as a deemed negative. SEBI is fine with it getting recorded as a deemed negative, but not considered as a deemed consent. So be slightly careful on that. And next, we have the most important point coming. Bhavin would request you to take over.
Sure, Leela. So, next slide, please.
Yeah, it's on.
This is borrowing one.
Yeah. If you could just go to the next slide, Shreya, in the order of importance, let me just quickly cover.
Sure.
Shreya, referring to slide 18 on fees and expenses. Yeah, this is the one. So this is, I think, the most critical and the most sought after in terms of clarification. So let me quickly take this up and clarify for everyone's benefit. So I think, again, big picture, quick clarification. I think the idea behind this section and the data that is being sought after is to ensure that all funds have collectively met the SEBI circular on fees and expenses and distribution fees that had been introduced with effect from 1st of May. So I'll just quickly walk you through every column here so that we are all on the same page. So firstly, this information is sought after at a scheme level. So when you say name of the scheme here, one scheme which has multiple share classes, we will need to take averages across. So you need to populate this at scheme level, point number 1. Point number 2, in terms of time frame, the data needs to be put from starting 1st May 2023 till the period for which you are doing the reporting. So in the first submission that you are doing, data from 1st May to 30th September will come in. Post which in December end quarter, when you do the submission, you will again do 1st May 2023 to 31st December 23. Please feel free to drop in questions. I'll pick them up in a couple of minutes once we go through these 5 points. So that is on the data, the period for which the data reporting needs to be done. Now, going to column B, which is management fee percentage per annum. This needs to be put as the weighted average for all the classes where investments have been collected. So for example, if you have 5 share classes with management fees ranging between 1% and 2%, just do a value-wise weighted average of the commitments that have come in each of these share classes, and you will get one single management fee percentage which needs to be input here. On column number C, to quickly move ahead, tenor of the scheme. Now, of course, for close-ended funds, you will need to put in the tenor which is envisaged, not including the extension period, the actual tenor where the scheme maturity happens, minus the start date. So that is the tenor that you need to put in. Second, next column D is a simple mathematical formula, which is B into C, which is the total management fee charged over the tenor of the fund. Column E represents the distribution fee that has been paid upfront. So there are a lot of nomenclatures which are used, which is, say, for example, setup fees, placement fees, distribution fees, etc., etc., etc. The point to be put across is that you need to club all payments that are upfront in nature. So anything that is upfronted needs to be put here and added together. So if you have 3 heads under which you paid upfront to the distributor, please add those 3 together and put that total percentage across. The last column is the trail commission that is being payable to the distributor on a per annum basis. Again, we have to do a value-wise weighted average. So if you have distribution fees on a trail which range between, say, 0.5% to 1%, hypothetically, do a value-wise weighted average on which share class, how much commitments have we taken. And when you do the weighted average, you take the commitments. I understand that some funds may have a AUM-based charging approach, so the actual fees may vary slightly, but it's best to keep a standard metric for all these computations. So you can take commitment as the base, do a value-wise weighted average, both for management fees as well as for distribution fees. And that is the last value that needs to be put in there. The next clarification before I take questions is how do we make this adjustment for open-ended schemes? Because there will be a few open-ended schemes that may be also needed to report it for. So you need to take expenses basically for a 1-year period. And that is the metric that you have to use for any such table populated for open-ended funds. Let me just quickly go on to a few of the questions. And I think the question that we are seeing repeatedly come in is how do we report this for angel funds? So for angel funds, my understanding, and Leela and Pravesh, feel free to chip in, is that the fees is typically not in the nature of management fee only. There may be other fees as well. So basically you need to club all those and put a collective fee, which will be close to or a replica or a proxy for the management fee percentage, and basis that the table will need to be filled in. I'm just taking a couple of other questions. So management fees and distribution fees are payable on capital contribution. How do we estimate the fees? So again, you need to look at the current period under question. So for example, from 1st of May 2023 to the date of reporting, what has been the average rate, and just use that as the basis. The next question is, if there are no investors onboarded after May 1st, 23, is there any need to fill this table? My understanding is no. You can just fill NA because all the information here is sought from with effect from 1st May 2023.
Correct.
So those were a couple of questions that I saw. Feel free to put in more questions if applicable, or Pravesh Leela if I missed something out.
Yeah, correct, Bhavin. That point was critical, that if fund is had a final close before the 1st May, then technically we need not to report anything here in this particular table.
And I'm just taking the questions one by one as I see them getting populated. If the distribution is paid by the IM, then will it come or not? Absolutely, it will. Whether fees is paid by the IM or the fund, as long as the distributor is compensated, it needs to be reported. So maybe I'll pause here. Happy to take any questions which keep coming in, but relaying this back to you, Pravesh.
Yeah, sure, Bhavin. Thanks. So we will just go through quickly on the bit of a valuation. And I think before that, the borrowing. So borrowing, there is no major change from the previous reporting format. It is more or less in a similar format. So technically, there is no specification as such. Only the details of the pledging we need to add here, which was not a part of the earlier reporting format. So we need to give the reporting for the pledges if we have made anything for the borrowing in a particular Cat 1 or Cat 2 AIF. Subsequent to that, the latest valuation. This is also a critical one, and we have received multiple queries on this part as well. Then how to report, what to report, and we had a good discussion with SEBI also on this particular table. In this particular table, we need to report according to the regulation 23 of the AIF regulation 2012. Here we need to give the date of a valuation as on when we have done the independent valuation certification from the independent valuer, and we need to report all the investment valuation on that particular date which we had in our portfolio and for which we have taken a certification. And the manner how to consider the valuation, that also we have given the clarification, the reporting format itself, that for the fund of fund investment, we should consider the NAV reported by the particular fund houses. For the listed securities and the temporary investment, we can refer to the respective stock exchanges to take the valuation. And for the unlisted bit, we can consider the proper calculation through the valuation methodology considered by the independent valuer. But we need to report all the valuations on the date of the valuation certificate. So just to give an example, which was earlier touched upon by the Bhavin as well. So let's say if we are reporting for 30th September, but we don't have a latest valuation as of 30th September. So we need to report everything here, which was our last valuation date. So in considering the Cat 2 AIF, the last valuation would have been done in the March 31st March 23. So technically all the valuations of the listed, unlisted, fund of fund, everything for that particular date needs to be reported here. Agree, it won't be in a sync with the valuation details which we are providing in a holding details. So that is understanding is correct. That won't be in a sync. Here we need to report the valuation done as per regulation 23. So specifically we will report only for that particular period or a date on which we have considered the independent valuation certificate. Here, so Bhavin almost explained you everything here. So I don't feel any additional things to be considered here. So here were repetitive questions which we have received in open-ended case. So we have made the clarification here that we need to consider 1 year for the open-ended scheme. And just to give the highlight here, so many people have a question that we are charging fees on the AUM, some on the contribution, some on the commitment, some might have some other different methodology as well. but try to understand the whole purpose of SEBI adding this particular table, just to check whether you have complied with the distribution or the expense mechanism or the structure as per the latest regulations of the SEBI. So considering that we have, SEBI has moderated this to the percentage terms. So it's better to give a flavor in a percentile term, whatever the base may be, but in a percentile term, we are charging X, we are giving X minus 2 as upfront, and let's say X minus 1 as a distribution trail fees. So that should comply, those numbers should comply with the regulation shared by the SEBI. That is the whole purpose of this particular table. We need to comply with that, irrespective of the base nature of charging of fees. In percentile term, it should be in a sync with each other. That is the whole objective. Fair housing, Leela, would you like to take this or highlight anything specific here?
Sure. So in this one case, just to ensure that your relationship of warehousing entity with AI or sponsor and manager, as you would know, there is a circular which says that if you are purchasing or selling any security with your associate, you need to take appropriate 2/3 level of approval. So please be mindful of the fact that when you are putting in a relationship and if this transaction is happening after the date of a circular, this is a trigger point for SEBI asking you whether did you take consent or not, which reflects in your earlier consent data sheet. So be please mindful. This is all connected to the data sheets that's included. So please be mindful when you include this data. In terms of the PPM audit report, we have a lot of questions saying that which audit report should get included. This is basically the last year's audit report. The moment this year's September 30 gets triggered, you will continue to reflect this data in terms of this year's SEBI audit, which is the PPM audit, which is September 30, 2023 onwards. So that's you should be careful about. We move to the next one. In terms of non-compliances, if you see there are two tables. One table talks about the compliance test report, which is particularly what you have captured in your CTR, which you have submitted in terms of deviations. If there is any deviation, it is to be captured in brief. The first table is the most tricky portion. This is basically, if you see now, the compliance officer is required to report any non-compliances to SEBI within 7 days. So if there is, don't use this as a conduit for reporting in lieu of what SEBI expected the compliance officer to report. This is just a reconciliation or a compilation of the non-compliances that your SEBI compliance officer reported to SEBI. So this is not a reporting vehicle or a mechanism. If your compliance officer has observed a non-compliance, he or she has written a mail to SEBI. This is what you need to include over here, and don't use this in lieu of the other one. They'll be very categorical about it. Don't assume that whatever you have written in a quarterly report is a deemed reporting to the regulator. Please don't use that as a conduit, because this is SEBI has been very categorical, and specifically they told us, please instruct the members that this should not be used as a conduit for reporting. We move on to the next one. Complaints are self-explanatory in terms of arbitration. Both the arbitration, if there is an arbitration which is initiated under the ODR mechanism of SEBI or the other arbitration, both have to get included. If there is a mediation which is included or you have done a conciliation, please ensure this gets included in this section, because we understand that the ODR gives you all the three options. But if anything has got initiated under the ODR mechanism or the general arbitration mechanism, please ensure it gets reported here, and ensure this matches with the disciplinary history that you provide to the regulators also. So please ensure wherever your data are, they are in sync with each other. We move on to the next one. I think over to you, Prakash.
Yeah, so leverage reporting, nothing specific. It is same in a sync with the earlier reporting format, which is the old one. So technically, we need to report everything here on the all the trading day basis. So whatever the trading day, we need to report. So let's say for one reporting, we have, let's say, around 80 trading days available. We need to give these details for the 80 trading days for that particular fund. In the reporting clarification breach limit, if anything specific about the 2x, the leverage monitoring, if it is breaching that particular limit, then only we need to report specifically in the table 2. Now some just specific light on the angel fund side, because we have received some queries from the angel fund side as well. Details to be provided is at a fund level. So there were questions that whether we need to report everything at a scheme level. So let's say one angel fund may have a 10 underlying scheme. So whether we need to report everything at a scheme level or at a fund level. So it is good to report at a fund level details, including the commitment, everything we can report at a the scheme level, and whatever at a fund level, and the scheme level we can give the details of the holding and everything, the investment holding and everything we can give at a scheme level. The script will be considered as a separate scheme. Likewise, we used to have the co-investment in the main fund. The statutory limit monitoring as per the AIF regulation for the maximum investments and all that should be monitored at a fund level and not at the scheme level. The number of investor in each scheme should be as per the regulations of the angel fund, which is applicable at a scheme level and not at the fund level. So that 200 not more than 200 investors. The number of scheme launched by the angel fund to be reported basis the number of term sheet filed with the SEBI. As in when we are filing the term sheet with the SEBI, you can consider those schemes to be reported as per the regulation. When you will have initial close of the scheme in an angel fund, as and when you reach, because angel fund is quite a different bit of a structuring. So whenever you cross the limit, as if we have in the normal AIF schemes the 20 crore limit, likewise we have a limit in an angel fund of a 5 crore. So whenever we reach out the commitment, when we received the commitment of 5 crore or more, we can have our initial close, and accordingly the dates and details we can report on. Subsequent to that, we might receive the contribution, and accordingly we have an investment. But there is a possibility that without having an initial close in that particular sense also, if we have received the cross the commitment of 5 crore, we can have our initial close in the angel fund. Happy to take the questions now. I think we will go through the questions and we'll try to explain as many as possible.
In the meantime, to the audience, while the speakers go through the questions, we just wanted to let you have this information that we've engaged with SEBI. Many funds wanted to start reporting their September ending data on the SI portal, for which the deadline is 15th of November. As of now, SEBI portal may not be working, so you'll not be able to upload the same. So do wait for a few days. And we'll give you another update as to when the SEBI SI portal is ready for the upload of the September 30 data.
Correct. So there is a question from Saurabh saying the exits versus principal repayment is a difference. Yeah, exits. So there is a nomenclature. So we have a huge industry across around 1200 AIFs and all. So people might using a different nomenclature for the having a inactivation of the investor or exiting investor from the fund. So principal repayment. So being so I'll give you an example. The principal repayment, you are the active investor committed 1 crore. Still you can have the principal repayment being an active investor having a commitment of a 1 crore. But exit is a type of a redemption which you are exiting, or you are getting into a category of an inactive investor from the active investor, and technically your commitment will be reduced accordingly if it is a partial exit, and you will be inactive investor if it is a full exit. So technically exit will be treated as a redemption or a forfeiture in that sense, and the principal repayment is a partial distribution from your principal. Cash calculation as per note is negative. There is a possibility having a negative calculation. As I told you that if you follow this particular formula, if you have any specific exceptions, you can moderate basis that, because that could be a specific to your fund or something like that. If anything specific that we need to, as an industry, we need to add on or add in the formula, we are happy to discuss that particular portion separately through IVCA. So Rohan, if you receive any such comment specifically on that particular part, we will definitely take it forward with the SEBI and accordingly include in the reporting format itself.
Yes, absolutely.
Yeah.
And so just for the audience, this presentation as well as the recording of the webinar will be uploaded in the quarterly reporting section on the SEBI page on the IVCA website. So you have to go to ivca.in. There you have a page named resources, and that there's a SEBI page where this quarterly reporting format was introduced by SEBI. So there, this presentation as well as the webinar recording will be available for you to peruse later.
Yeah, so there is a question from the Samay saying, kindly let us know whether the amount of cumulative fund raise should also include the amount of drawdown on account of reinvestment of a fund. where the reinvestment drawdown is not a part of reporting set table, we request you to kindly, so technically speaking, when your fund, you are having an active investor. So there is a common question also, what is the active investor? So active investors are the investor who are the part of the fund and having the active commitment into the fund, who are not exited from the fund through whatever the nomenclature we can use, whether it is exit, forfeiture, redemption, or any other format we can use. So the investor who is existing in the fund as of the quarter ended reporting period, that should be considered as active investors. And the cumulative total commitment should be it should be maximum, the cumulative fund rate should be maximum equals to your total cumulative commitment. It should not exceed the commitment amount. So in any given case, your commitment amount should not be lower than your fundraise amount. That is the thumb rule we need to follow. Yeah, if you say there is a possibility that we could have a lesser cumulative fundraise than the commitment amount, but it should not be a vice versa ever. Whether corpus and investment to include in reinvestments. Yeah, so cumulative investments should include the reinvestment as well. Anything which you are investing in the fund since inception, that should be the part of it. And all the divestment should be the part of your cumulative divestment. Value of divestment should be at a cost. Definitely, you can refer the table nomenclature itself. It suggests the column header that it should be a cost. So in corpus details, everything which we are reporting, that is everything is at a cost only. Temporary investment includes fixed deposit. Yes, we can say that the temporary investment includes the fixed deposits. For column C, if we have received contribution and have not allotted units, still we will show in column C. I think I have explained all these cumulative fundraise bit.
So there is a question on whether NAV needs to be reported for Cat 1 and Cat 2 AIFs. My understanding is both Cat 1, Cat 2 AIFs, you will need to have published NAV on an annual basis. So on the date that you are submitting this, please take the last available annual NAV that has been taken and report that. There is another question on different valuation dates for different investee companies. How should we report that in table 11A? My sense is there is no space for giving different valuation dates. So not sure how this will get captured in. Pravesh, you want to take this? Maybe we take the majority and the dates which are different can be put somewhere in comments, I guess.
So I think he's referring to other table others where we are reporting a valuation as per regulation 23. So everything needs to be reported on the date of when we have done the independent valuations, and we need to report everything as of that particular date. So it is clear that everything needs to be reported on that particular single date. It won't be in a sync with your holding details which you are providing in the investment details. No, that is not the logic. So there is a questions that if we don't have a GST registration, whether we should consider GST or not. Let's follow the uniform practice that keeping any loop, not keeping any loop in that particular case. So we will be taking a GST amount while calculating the investable fund and the direct tax amount, if any. It's applicable in Cat 3 specifically, that we should not considering the tax expenses. Try to keep as simple as possible. So for your internal purposes, if you want to add anything or keep any buffer specifically for your internal investment monitoring purposes, that the call your investment manager or a fund manager may take internally, that is a separate, but while reporting, we need not to consider the GST and all.
Thanks so much, everyone, for pouring the questions in. We are trying to respond to some by chat mode and taking some on where clarifications are needed. So if we've missed any, please do put them again. It's a little difficult to keep track of all. So feel free to keep adding questions, please.
Of status of security, this is a good question. I supposed to capture this part, that how to report the security status or what type of securities at the end of the quarter. So technically, while reporting, it is details which we are providing in the investment is as the end of the quarter. So whatever the status of your that particular script as the end of the quarter is there in your portfolio. So let's say take an example that eProtein will get listed in this quarter technically. So in reporting of 30th September, reporting it be a unlisted one, but subsequently when reporting in a December, it will be a listed one. So technically the status of the security as at the end of the quarter, you need to consider accordingly. Yeah, valuation, we capture this point that valuation will be a couple of quarters or a half year back, that need to be considered as per regulation 23. So again, there are multiple questions on the temporary investment, the bifurcation or the disclosure or bifurcating the temporary investments. So that's technically how you treat that particular investment is on you, that what is the temporary investment. There is no specific definition as such to give a clarification ki bhai ye 4 investment will be considered as a temporary and rest everything will be as a fixed investment. Basis your purpose and everything, you should be able to justify that, and you should be able to bifurcate that as a temporary investment. You may consider accordingly. We won't be able to give the trade wise or transaction wise or script wise bifurcation, that whether these 5 script or 5 transaction will be considered as a temporary and rest will be as an investment. That won't be possible to give the clarification in the reporting format. Valuation, if you are providing for provisions and everything, so on the particular date of reporting, if you have provided anything for a particular script in your portfolio for impairment or the provision or something like that due to XYZ event, you need to consider accordingly. So there could be a possibility that you are filing a report on 15th and on 10th you come to know that I need to provide something in this particular script. So that is important when you are taking the impact in your books. It is not, so technically we are reporting as of 30th September. So what is your status of evaluation and everything on that particular date needs to be considered. It is not that it should not be considering that the prior period item kind of thing. So it's better we consider stick to a position as of 30th September in our current case, and likewise in a future quarter ended. I think I have cleared the active investor and inactive investors. The investor who all are the part of the fund on the reporting period will be considered as an active investor, and investor who is out of the fund books and exited through whatever nomenclature we can use, it will be considered as an inactive investor. If the sponsor manager is the same, then how we should report? So technically in that case, you need to consider anything one specific that you need to consider in that particular column. So if you see, so your sponsor and manager is the same, then technically speaking, a sponsor is a regulatory requirement. So it's better you report your commitment and contribution in the sponsor column rather than reporting into the manager part. Table 3. So co-investment details. So earlier in the second format, so prior to this format, which was a new format, applied in December 22. Then we supposed to provide the details of the co-investment made through the main funds. But now in this new format, which we are reporting from the June, we need not to report anything for that co-investment portion. And as per the new regulation, the co-investments are now routed through the PMS investments, and technically we have suggested SEBI to keep this as a part of the PMS reporting and remove it from the AIF reporting, And luckily, this was very, very humble, the SEBI officials, that they have accepted this proposal. And the reporting format is, the co-investment reporting format is out of our reporting format. And it is added into the PMS reporting format, or it will get added into the PMS reporting format.
So we see a question from Nihal. We have responded to this. In case you have an HUF or a partnership firm, your classification will go in others. In case of LLP, it will go in other corporate. I had sent in a written message to you, so please have a look at it.
Yeah, corpus details we need to provide only for active investment, all the details. Only the principal repayment portion we need to provide for all the investors and the investment since inception of the fund, irrespective of whether those investors are active or inactive. We need to give the complete picture to the SEBI. Now, one additional point I want to highlight here: if your any scheme getting a close during the quarter, then how you will report that particular. So technically, you will provide all the details accordingly as per the last NAV date and the closure of the scheme. But specifically in the corpus details, your commitment will be 0 as per the definition. Corresponding to that, your cumulative fundraise will also be a 0. But technically, your principal repayment will be the full amount which you have repaid to the investor as part of the principal distribution or principal repayment. Table 7A and 7B. Change of investor status. So whenever as per the reporting period, if there is any change in your residential status of the investor, whether it is residential status or actual status, technically we need to report accordingly, and that should not be in the sync with the original signing documents date, but it should be as per the updated record with the RTA.
So the exemption that's written in the note for the investor category is because of the director sponsor, because as you would know, the regulation gives some exemptions for investments, right? Like manager, your employees or manager can do 25 lakh investments. And the moment you change the category, if they leave, they become breach of the regulations. That is the reason that specific carve out was brought out in the note. If you see, there is a note which talks about directors and managers who sponsor an investor. In case of other categories, if there is a change in the category, please record it. That's what we explained, that please go ahead and record the other changes just to ensure that you do not fall, because the moment you see there is a change in category, it looks like a non-compliance. That's the reason there is an exemption carved out, just to ease out the way the disclosures have happened. Okay, in terms of CTR, we see a lot of questions. Your CTR is made at fund level. If the same CTR captures non-compliances relating to a particular scheme, you have to write the name of the scheme and give the non-compliances. And if it applies to all the schemes in general, you have to put the names of the schemes and repeat the same word. SEBI expects you to say which schemes had a non-compliances. So it is not being expected at a fund level. It is being expected at scheme level.
So again, I can see here a repetitive questions. If our sponsor and a manager is same, then how we will report? So technically speaking, the sponsor is a regulatory requirement of having a specified investment through a sponsor. You can keep your specified investment through a sponsor as a particular amount, whether it is 5 crore or 10 crore, whatever it is. And as far as manager is concerned, so you may bifurcate that with the specific details monitoring with the RTA, and you can keep your specified amount of investment by a particular entity as a sponsor and by as a manager, that you can do. But having said that, if you have a specified investment of, let's say, 5 crore in Cat 2AF, then by default you need to keep it as a sponsor. You can't keep it as a manager. So there is no double reporting as such. You need to report under particular head only. It's better if you can document it and keep it clear, very clear. If you have more than 5 crore investment, that's better. But if not, then technically you should report under the sponsor. So it was clear earlier also that the investor onboarded after 1st May only needs to be considered in the table others for the expenses and the brokerage part. The investors onboarded prior to 1st May need not to be reported. So there are two circumstances. One, the scheme has its final close before 1st May, then technically you need not to report anything there. If your scheme has a final close subsequent to 1st May and you have a 2 tranche of investments or investors onboarded prior to 1st May and subsequent to 1st May, then technically you need not to consider the data for a prior to 1st May onboarded investors. You need to consider all the details of the investor from the 1st May onwards. That should be YTD. Till the time you are not getting into a final close per se, you need to keep reporting cumulative data from the 1st May onwards for those particular schemes. So logically speaking, there are questions whether how to calculate the investable fund for the angel funds, how to calculate the investable fund for Cat1 fund or any other schemes where we are not charging fees basis the tenure of the schemes or the fee schemes. In that particular case, try to understand the logic of calculating investable fund. It is a logic that whatever be the technically the part of the fees which is mandatorily will be charged or technically it will be charged over the period of fund tenure, that we need to reduce. So if you have any other logic or specifications for any particular scheme, then technically you can keep that bucketing accordingly, and you can charge your expenses accordingly for calculating an investable fund for those particular schemes if it is not directly related or comparable with the tenure of the scheme in that particular sense. Or you can proportionate to justify that total number comes to whatever you are going to actually charge to that particular investment, and accordingly you can make it in a link with the total tenure of the scheme or the tenure of the scheme accordingly. Value wise total weighted average commitment again. So how to calculate the weighted average commitment? Absolutely, if you have a multiple distributors in a fund, multiple classes, multiple distributors, accordingly you need to consider the weighted average portion of your upfront or trail or anything like that basis the per annum. Need not to get into the specification of a calculation. You need to be very clear that you are reporting the numbers in a per annum format. So it's a pure clear maths. You need to calculate the weighted average numbers.
So we have a request which says, please repeat on the point date of PPM audit to be reported in the template. So the expectation from the regulator is, well, the PPM audit is expected to be done once in a year. So if you're reporting now for the September quarter, which means that the deadline for reporting your PPM audit is September 30. So in your November 15 report, you will reflect the PPM audit report which you have submitted to the SEBI for September 30, 2023. Till the next year, because now the format is not going to change, till the next year, by the time your next deadline of September 30, 2024 comes, you will continue to report this data. It just remains status quo. Over a period, SEBI is going to take this out because there is a new PPM audit format that SEBI is expecting to be uploaded online. Till the time that becomes automated, this number will be a status quo. So it's just going to be once a year filling.
Leela, I wanted to come in here. So I think there are many repetitive questions that are coming now, and we are also at 5:30.
Yeah.
So maybe about 2-3 minutes, 5 minutes max of answering the questions. Otherwise, we can, pick it up, save this chat, ask for folks to write to us, and then explain the, rest of the questions again.
Sure.
If that is fine with the 4 of you.
Absolutely.
Absolutely, Rohan. That's a great
Absolutely.
idea. I think, we can take the next couple of minutes, but, feel free to reach out to any of us through the IVCA team, and we'll be more than happy to clarify. I'm sure when you get onto the portal, when you start looking at data and you start populating, I'm sure few more questions will come. So feel free to reach out to us through Rohan and team.
Yeah, we'll provide on the page that I mentioned on the IVCA website, we'll provide a link where you can put in the queries as well, so that, we receive those consolidated queries and we respond. All right, so last few questions.
We have a standard comment that comes that, okay, our scheme does something very typical, right? So let me put it in this way. all the questions that we received from the participating members, we tried to bring it in front of SEBI. SEBI was very clear in their head that, see, every fund is different and they will be operating very differently. It does not mean I can standardize the template. You may have very typical questions to it. So try to do the permutation in a very logical manner, so that even if you put a submission and this data is picked up for an inspection, so we are getting you inspection ready, basically saying, why did you report this? So the simple answer is, while the SEBI portal spoke about ABC things, the most typical way or the most right way for me to do was this, and that's the reason I prepare a proper note and keep it. If in case you want to speak with your dealing officer, please feel free to write to your dealing officer and keep it as a record. Because don't expect that for every permutation and combination SEBI is going to come up with it, because this is what I think 80% of the industry could like give a feedback to us, and that is what. So many people come and complain to us saying that why was this not considered? Because this was not considered because SEBI could not templatize it. So that's the unfortunate part, because for everything SEBI gave an answer, I cannot templatize it, I will not include it. So please include it. This is not worst of situation, because in the last format it is even more worst. So please try to understand. If in case you still have questions, please write to us, because there is a leeway that we have been given in terms of raising issues of industry with SEBI, and they will think about it if something can be done in the reports that is going out. Please feel free to write to us, because now after November 15, changing a template may become slightly difficult. So please write to us in case you want us to look into it.
Correct. Before we conclude, just a couple of questions, which seems to be a little bit important. So Vineet has written that the calculation of this regulation to as per the calculation of value, valuation as per regulation 23 need not to be as an independent valuer, or whether it is an internal valuer. So technically, please go through and refer the regulation 23, whether it is allowing a valuation needs to be done or done by a internal valuer. So let's not get away with the options available. Just refer the regulation and accordingly write on the particular the nomenclature needs to be considered while reporting anything in a particular format. Also, one question from on the part of the expenses, the other column table, the expenses charged for the calculation of from 1st May onwards. So technically, whether you have paid the upfront fees or not, but technically you need to consider everything, because we are reporting here in a totality for the full tenure of the fund. It is not on the basis whether we have actually occurred this or not, because giving a trail fees details for, let's say, for next 5 years, or calculating management fees for 3, 4, 5 years is not that which we have actually occurred as on the particular reporting date. But any expenses which is pre-decided one, which will be occurring in a coming future, you can consider those expenses while computing the expense structure.
Absolutely. So I think, Pravesh, to just add, just focus on the accrual, guys. That is what you use for computing your NAVs, for your management fees. So just stick to that principle. When this is paid is a little irrelevant in this overall computation, because what you're trying to look at is what is the fee that you would have charged to the client and what is it that you would have paid to the distributor. So just work on that principle.
Correct. Guys, if you refer the format, so many of the questions are the similar in nature, which we have multiple times explained or given a clarification through multiple other routes or a discussion. Just keep calmly, sit together with your team and all, just go through the format. I think the format is so clear that so it is the case of a 99%, 1% there might be an exception for that particular investment manager or a AMC, but 99% format is so clear that you will be able to understand if you read it calmly. The header of the column, header of the particular table or something like that, if you go through the notes given to the particular format, you will able to identify the solution to it. There won't be any as such clarification required, or you will be the table is a self-explanatory. So just sit calmly and go through it. I think most of the questions will be answered itself by your own interpretation by reading the format. So
yeah, the only suggestion is to go through this much before the deadline, so that whatever queries come up, please raise it right now and not on November 15th. That's the only request.
Yeah. And we have added some notes, clarification basis are this discussion or prior to these discussions and the queries received from the industry. So I think sooner or later you will receive the clarification notes or something like that. So Rohan, we will share with you the revised format. So you may get it discussed with the SEBI and accordingly circulate. So there will be better clarity on some bit of the reporting format. So it's just a clarification, nothing changed. Whatever we discussed, that is what we have considered, but we have given a better clarification in that sense.
Sure, absolutely. So with that, I think we should conclude now. Thank you so much to the four of you that, you could take out time on a busy day and, spend it with our members, clear all these doubts. This was much needed for the industry. So thanks again. And what we will do is we'll, to all the members who are still logged in, we'll just upload this on the website. Please have a look again. You hear out the recording again to, go back to what the responses were. And if at all still you have any questions, you could write to us on advocacy@ivca.in. We'll also post it there. It's on the website as well. So thank you to everyone, and looking forward to a very efficient and smooth form of reporting for the November 15th deadline that we have. Thank you so much. Thanks, everyone.
Thanks so much, Rohan. Thank you so much, everybody.
Thank you, Rohan.
Thanks, everyone.
Thank you.
Thanks.